In this video, we will be completing a process cost summary report using the weighted average method. If you haven't watched the video covering the introduction to process costing, I strongly recommend that you pause this video and watch that one first. Recall this equation. The cost of beginning work in process inventory plus the cost added this period are equal to the cost of units transferred out plus the cost of ending work in process inventory. The left-hand side of the equation is called the costs to account for and are known, whereas the right-hand side of the equation is called the costs accounted for, which are unknown. The goal of the process cost summary report we are about to complete is to use the known costs to account for to assign the unknown costs accounted for. The weighted average method, which is the focus of this video, assigns the costs accounted for based on the averaging of costs in the current and prior period. Let's take a look at an example of a process cost summary report. The example we will be completing relates to the Unbelievable Orange Juice Company. This is the process cost summary report using the weighted average method. This is for the juice extraction department, which is department number 1. Remember that you'll have to complete one of these reports for each department that the product must go through. And this is for the month ended October 31st, 2021. The first section is for the costs charged to production, also known as the costs to account for. And this is the left-hand side of the equation that we looked at earlier. It's equal to the beginning work in process inventory plus the cost incurred this period. So when we add those two numbers together, we will get the total costs to account for. And I also noted that the total costs to account for are known costs, meaning they should be given somewhere in the problem. And indeed, if we looked over here on the right, we see the given cost information, both for the beginning work in process and for the costs added this period. So we can start with the cost of beginning work in process inventory for direct materials. That's listed right over here. The beginning work in process cost, direct materials, are $44,000. So we can type that into this box. Next we have the conversion costs. Now remember, conversion costs are equal to the direct labor plus the factory overhead costs. So what we can do is we can take the direct labor from the beginning work in process and add the overhead, and that gives us $42,800. The total cost of beginning work in process inventory is equal to the sum of those two numbers. So $42,800 plus $44,000 gives us $86,800 for our total cost of beginning work in process inventory. We can use the same idea to complete the cost incurred this period section. First, for direct materials, the cost added this period are $76,000. So we can type that in. The conversion costs, being the direct labor and overhead, are equal to $27,000 plus $67,000, which is $94,000. The total costs incurred this period is just the sum of those two numbers. So we can add those two together. $76,000 plus $94,000 is $170,000. The total costs to account for are equal to the sum of the cost of beginning work in process inventory plus the total costs incurred this period, the left-hand side of the equation we discussed earlier. So when we add those two numbers together, we get the total costs to account for of $256,800. So I want to remind you that the purpose of this form is to take the total costs to account for, the known costs, which are $256,800, and assign them to the costs accounted for, the unknown costs that we must assign. And those are equal to the cost of units transferred out, and then the cost of ending work in process inventory. So this $256,800 is going to have to be split between the transferred out units and the ending work in process. But we have a few more steps to do before we get there, including the equivalent units calculation as well as the physical flow reconciliation. So for the physical flow reconciliation, we're basically just detailing out that formula we discussed earlier, but now applied specifically to units. So all the values we're going to fill in here are going to be related to units. So instead of the total costs to account for on the left-hand side of the equation, now we have the units to account for. And instead of the total costs accounted for on the right-hand side of the equation, we have the total units accounted for. But the terms inside each side of the equation are going to be the same, but now just applied to units. So first, let's start with the units to account for. First, we have the beginning work in process inventory. If we look over here at our given unit information, we see that there are 5,000 units in our beginning work in process. So that's what we're going to type here. The units that were started this period are 19,000, as we can see right here. So we can type that in. And the total units to account for, which are equal to the beginning work in process units plus the units started this period, are going to be 5,000 plus 19,000 equals 24,000. Next, for the units accounted for, first we have the completed and transferred out units, And if we take a look over here, we see that's just left as a question mark. So we are going to skip that for now and come back to it. The ending work in process inventory, we do have that one. That is 4,000 units, so we can type that in. And then remember the equality of this equation. The total units to account for must be equal to the total units accounted for. So that means this 24,000 can also go right here. So we have 24,000 for our total units accounted for. And that should clue us in that this blank is going to have to be, well, 20,000, right? If we put 20,000 here, then we have 20,000 plus 4,000 gives us 24,000. Alternatively, you can take 24,000 and subtract 4,000, which will also give you the 20,000 that we want. At this point, I want to note that everything we've done so far would be identical under either the weighted average or FIFO method. As we get into the last two sections, there will start to be some differences between the two methods. Next, we have the equivalent units of production calculation. Remember that the equivalent units are the number of units that could have been started and completed given the costs incurred this period. We do the equivalent units of production calculation for the units accounted for, the units we need to assign costs to, which are the units transferred out and the units in ending work in process inventory. Note that the units transferred out actually come from two different places. Some of the transferred units were started last period, so they come from beginning work in process inventory. The rest of the units were started this period, so they were started and completed all in this period. Under the weighted average method, we don't differentiate between what period the transferred units started in. We simply list them all in one line titled the units completed and transferred out, which blends the units from last period and this period together. If we were to do the FIFO, or first in first out method, the units completed and transferred get split into two separate rows. So first there'd be a row for the equivalent units to complete the beginning work in process, and then we'd have another row for the equivalent units started and completed in the period. So this is just one difference to watch out for between the two process costing forms. So first we have the equivalent units completed and transferred out. And if we look up here, we see that there were 20,000 units completed and transferred out. So we need to know what percentage of these have been completed. Well, if they've been completed and transferred out, we have completed 100% of those units. They're all the way complete. So therefore, it's going to be the entire 20,000 for both direct materials and conversion costs. So we can type that in here. And that will always be the case for units completed and transferred out in the weighted average form. You'll just have to take this number here. Next, we can do the equivalent units of ending work in process. And we can do that first for the direct materials. So if we look over here, we see that there are 4,000 units in ending work in process. And if we read this note right here, we see that 100% of the direct materials are added at the beginning of the process. So if we're dealing with oranges and orange juice, all of the oranges are added at the beginning of the juice extraction process. So therefore, these 4,000 units in ending work in process have already had all of the oranges added. So that means all 4,000, or 100% of the 4,000, should be counted. So we can type in 4,000 here for the direct materials. Next, for the equivalent units of ending work in process for conversion costs, which include the direct labor and overhead, we usually have to assume that the conversion costs are added evenly throughout the process. So that means if we're 70% complete with respect to the 4,000 units in ending work in process, 70% of the conversion costs have also been added. So that means that the equivalent units are just going to be 70%, or 0.7, multiplied by the 4,000 units in ending work in process, which gives us 2,800 units. Next, we can find the total equivalent units of production by adding up the previous two rows. So for direct materials, that's 20,000 plus 4,000 equals 24,000 total equivalent units of production, and for conversion costs, that's 20,000 plus 2,800, which equals 22,800 equivalent units of production. Next, we can calculate the cost per equivalent unit of production. And here is going to be another difference between the weighted average and FIFO methods. For the weighted average method, we assign the cost per equivalent unit based on the cost of beginning work in process inventory and the costs incurred this period. Whereas when we do the FIFO method, we will only consider the costs incurred this period. So these are costs that we've already kind of used before. First, the cost of beginning work in process inventory for direct materials. We can look back up here. The cost of beginning work in process inventory for direct materials, that's 44,000. And then the cost incurred this period for direct materials, go back to that same section, it's 76,000. And we can do the same kind of idea for conversion cost. Cost of beginning work in process inventory, cost of beginning work in process inventory, conversion costs, 42,800. And then we need the conversion costs for costs incurred this period. And right here we see costs incurred this period for conversion costs are $94,000. And then we can go ahead and we can add those two rows together to get the total costs. So for direct materials, $44,000 plus $76,000 is $120,000. And conversion cost, $42,800 plus $94,000 equals $136,800. Next, we have to take the equivalent units of production again, and we're basically just copying that down. So here for direct materials, it's this $24,000, and for conversion cost, it's the $22,800. And this little sign right here is a division sign, just telling us that we need to take the total costs and divide by the equivalent units of production. So for direct materials, $120,000 divided by $24,000 gives us $5. And then for the conversion costs, $136,800 divided by $22,800 gives us $6. So next, now that we have our cost per equivalent unit for direct materials and for conversion costs, we can take this $256,800 and we need to assign that now to the cost transferred out and the cost of ending work in process inventory. So first, for the cost transferred out, we have the direct materials. So the direct materials are $5 per unit, and then we can multiply that by the equivalent units completed and transferred out, which is 20,000. That's $100,000. Then for conversion costs, we can take the conversion cost per equivalent unit, which is $6, and multiply by the equivalent units completed and transferred out for conversion costs, which is 20,000. And that gives us 120,000. Then we can find the total cost of units transferred out by adding those two numbers together. 120,000 plus 100,000 is 220,000. Next, we have the cost of ending work in process inventory for direct materials. Again, we can take the $5 cost per equivalent unit for direct materials and multiply by the units of ending work in process inventory. So cost of ending work in process inventory, we just match it up right here. Units of ending work in process, 4,000. And that gives us 20,000. Same idea for the conversion costs. Take the cost per equivalent unit for conversion costs, which is $6, and multiply by the ending work in process inventory equivalent units, which are right here. And that's 2,800. And that gives us 16,800. Next, we can add those two numbers together, and this will give us the total cost of ending work in process inventory. And then finally, we can get the total costs accounted for, the right-hand side of that equation we were dealing with earlier, which is equal to the total cost of units transferred out, which is 220,000, plus the 36,800 total cost of ending work in process inventory. And that gives us $256,800. Now note, as we've been saying all along, that the total costs accounted for, the $256,800, should match the total costs to account for, $256,800. So they do indeed match in this example. So that's one good thing for you to check. Alright, we are finished with the process cost summary using the weighted average method. Now there's just one more thing that I want to do, and I want to talk about this total cost of units transferred out, which is $220,000. Now remember, this report was for the juice extraction department, or department number 1. And now we're going to be transferring these units and costs to the next department, let's say the packaging department. And there's going to be an associated journal entry with that transfer. So if we go down here, we have some journal paper, and this is the journal entry for the transfer to the next department. And what you end up doing is you have to debit the work in process inventory account related to the new department, and that's going to be the packaging department, and that's going to be for that $220,000. And then we have to credit or decrease the inventory for the department you're transferring from, which in this case is work in process inventory, juice extraction. And that's also going to be for $220,000. And if it just so happened that you were in the final department, then instead of transferring into a new work in process, you would be transferring into the finished goods inventory. So then your debit would just become finished goods inventory. Alright, that just about wraps up the weighted average method for the process cost summary. Join us in the next video for the FIFO method.